Good morning, hi, it's Ross McInnes from Australian Investment Research Services. Thanks for joining us and hope you're having a good day. It's Friday morning in Sydney, 9:30 a.m. On June the 4th. Markets have now had a fortnight of stabilising after the big sell-off on the May 21st, which saw the S&P, the Australian S&P 200 index get down to 4175, which represented nearly a 16% correction from the April highs at 5,000. Since then, we've seen the economic data generally being reasonably positive, especially in the US and Asia. And this was backed up last night by the ADP private payrolls number, which showed a 55,000 increase, which is pretty good. But generally what we've been seeing is the repeat of the story. Exports are strong, and we've seen demand pretty strong through Asia. And this has helped the market to slow down the big sell-off that we've been having and stabilise, although volatility does remain fairly high. Overnight, what we had, the US stock market, after the 2.5% bounce on Wednesday night, it rose another 0.4%, mild rise, but most importantly, the S&P 500 has closed at a fortnightly high of 1,102. This will be tested tonight by the key number globally for the month, which is US May Payrolls. The market's looking for a 2-year high and rise there of 500,000 jobs. Most of that, though, is going to be from the 2010 census in the US, with private jobs more like around 200,000. Again, the key, though, is that this would still represent that the US economy is bottoming, and we still believe that it's finding firm footing at this point, probably ahead of what the market expects. So this is good news overall. But the markets definitely in Asia today will be waiting to see what that number is before going too far. On the day, S&P 200, the Australian index, did test 4,500 yesterday, fortnightly highs. We're seeing probably maybe a retest of 4,500 this morning. The resources tax drama is still dragging along, with BHP this morning being quoted in the Age newspaper in Melbourne that they believe the government needs to go back to the drawing board on the whole resources tax design, and also the initiative overall. So this noise is creating a bit of a drag behind the market, with the focus on Europe still there as well. But tonight, still that focus on US payrolls. The Australian dollar yesterday got up again near 85.50, got to 85.25, drifted all the way down to 83.60 this morning in New York trading, and then has closed back up around 84.20. The key to this tonight with the payrolls is going to be 82.80 level, which was being support during the week, and as we mentioned, at 85.50 on the upside. Euro dollar did weaken, has weakened again in the last 12 hours. Got up to 123.20, with 123.50 being overhead over last week, and it's trading now in Asia at 121.60. Key is that it hit 121.10 on Tuesday, which was a 4-year low, and we're watching that closely during the payrolls release, with any fall in US unemployment below sort of 9.7%, likely to trigger the view that the US Fed's going to tighten ahead of the ECB, which still seems locked up because of all the fiscal consolidation. So thanks for your time, and we'll speak tonight. Bye-bye.